time now to head over to Stan Shamu from IG in Melbourne. And Stan, a big day for the Australian dollar ahead of this meeting from the Reserve Bank. Are you seeing any positioning?
Yeah, absolutely. Of course, yesterday I think we did highlight that we're eyeing possibly buying dips into 1028, which is where we're seeing support for the Australian dollar. Unfortunately, it's since dipped below that level. Of course, we dropped all the way down to 10222. That was the low overnight, I think, early in US trade, and that was really triggered by that weaker than expected retail sales number, which saw positioning start to mount in favour of a 25 basis point cut today. But of course, all things weighed up. I think there's plenty of reasons why investors, why the market's sort of positioned for this cut. Of course, we're seeing the threat of disinflation. We've also got those retail sales numbers disappointing, and of course the unemployment rate's at a 3-year high at the moment. So it's not very encouraging if you do weigh those factors up. But overall, I think the Australian economy is more sort of vulnerable to external factors rather than these domestic factors impacting the economy itself. I think it's a factor of external factors coming in and feeding through in a way which it eventually slows down the local economy. So I think the RBA will have to really balance out what it feels the latest stimulus efforts by various countries like Japan, the US, China, and of course Europe saying it's ready to act as well. How this will in fact impact global demand, and if it's a situation where they think maybe we'll start to see a pickup as this stimulus continues to filter through the global economy, then maybe a wait-and-see approach is probably the most likely outcome, where they'll then assess if there's a pickup in commodities. Of course, we already are seeing equities quite elevated at the moment, and that's probably a better sign of things to come than just looking at retail sales and other metrics, which are sort of past indicators of where the Australian economy sort of was. And therefore, as a result, we'll probably see a situation where the Australian dollar bounces once or if the RBA decides to keep the rates on hold. And probably selling into strength is probably the most likely strategy today, particularly into that 1028 to 103 level, just mainly because that's where the previous support was. And of course, even if the RBA keeps rates on hold, I think that the statement will be quite dovish itself. So that will then result in a bit of a sell-off for the Aussie dollar heading into strength. Of course, ahead of the RBA's decision, we'll also have the trade balance numbers. They probably won't have too much of an impact, expecting a 0.2 billion surplus. So that will probably be just a bit of a curtain raiser for the RBA's decision, and therefore it won't have too much of an impact. Probably see the Aussie dollar chop around quite a lot ahead of the decision. Positioning will obviously heighten up heading into the decision, and then possibly it will stabilize after that, where we'll probably see maybe sellers kick in should the rates remain on hold.
Okay, what about the Japanese yen today? Keeping a close eye on that, as well as the Nikkei, because it's back online today after a few days of public holidays. Calls for gains of up to 3.5% today, which would mean fresh record highs. Are you expecting that kind of bounce, Stan?
Yeah, absolutely. We are calling it up 3.5% at the moment. That's for the Nikkei. And of course, you can't ignore the fact that the dollar versus the Japanese yen's come back to life, and it's really at elevated levels at the moment. I think overnight we printed a high of 99.46. So it really does look like traders are positioned for a break higher in the pair. Japan returning to trade today might just be the icing on the cake for the pair, and we might see it test 100 in the near term. Of course, that will also give a bit of a lift to Japanese equities, and we'll probably see the Nikkei trade higher as well.
Okay, Stan, what's in store for us here at home today? It's pretty quiet leading into the local session. No big news out of the US overnight, and a fairly flat finish there. We had London closed. Commodities didn't seem to move around much overnight. So what are you eyeing?
Yeah, no, absolutely. We're calling it up 0.4% at the moment to about 5174. I think that's mainly because we're just recuperating some of that fade that we saw in afternoon trade yesterday after what was a stellar morning. But of course, with London closed, there's no real leads for commodities. But BHP's ADI is pointing up about 1.1%, so that might be a little bit of an indication of things to come for the iron ore space. We might see a little bit of support at the open there. But of course, with the rate decision, it really makes it hard to call exactly how the market will go. We'll probably see it range bound and possibly consolidate in the same manner we saw in most European and US equities. Of course, after the big run that equities around the globe have had recently, then consolidation is always fairly healthy, I suppose, in this sort of situation. But with the RBA's decision, then that will be a big factor for all the yield plays in the market. We can't forget that the reason why we continue to see that yield play advantage is because the market's been pricing in the potential for further rate cuts. So that will be the game changer for the session. It will then impact on exactly how investors will be positioned on the yields side of things, and of course the retailers as well will have a pretty volatile session after yesterday's disappointing numbers. If the RBA doesn't come out today and take some action or give strong signs of action, then we'll probably see them trade lower in the near term.
Okay, Stan Shamu from IG in Melbourne, thank you for your time.
Cheers, Kate.
Well, there's a powerful rumour making its way through the market at the moment. Billionaire financier George Soros is shorting the